Hey there, Brian Vantoff here with RE/MAX Advantage Plus, Ramsey Trusted, and the Minnesota Real Estate Team checking in here on Thursday, April 10th. Hope you're having a great week so far. As always, if you've kind of been paying attention to what's been going on in the stock market, I'm sure, well, I don't know how you can't be, but if you've kind of been paying attention to what's going on in the markets in general, whether it's interest rate markets or the stock markets, you know that we had a fairly kind of wild ride here over the past 7 days. So it's been very interesting to kind of watch. In talking to past clients, friends, I have some of my clients who asked me some questions about what I thought was going to happen with the real estate market. There was concern that we were heading into a recession. There was concern that the volatility in the market and some of the things going on to cause that volatility were going to be impactful on housing and really kind of what that looks like overall. To me, this is a short-term blip. What happened over the past week was, for lack of a better term, kind of a man-made situation that was easily correctable, and it looks like it has been corrected. What I see is real estate is kind of a long-term play, not what's going to happen in the past 3 days or the past 7 days. It's really looking forward into the future and kind of where things are at. And I just said, yes, I see volatility out there. I think the volatility is going to stay within a fairly narrow range, whether that's on the stock market or whether that's on the interest rates, bond market. I still think we're going to stay kind of in a relatively narrow range on everything. So I told them, I'm kind of like, keep calm and carry on. And that's what I think when I think of the volatility that's happened over the past 7 days. If you have money in the stock market, if you had cash on the sidelines that you're looking to invest, maybe you made some money, maybe you lost some money. But whatever happened in the past 7 days is over. Now we kind of have to look forward and kind of look to see what our future holds. And I think we'll be just fine in the stock market, in the housing market, and the bond market. So if you're looking to buy or sell, don't be too terribly concerned about what happened over the past 7 days. It's not an indication of what the future looks like, in my opinion. So anyway, let's start with the stats for the week of those previously owned homes within a 50-mile radius of downtown Minneapolis in Minnesota. As we look at the stats, we saw 1,063 new listings hit the market over the past 7 days. That's 118 more than the week before and 130 more than the same week last year. 742 were single family homes. That's up 89 from last week. 199 are townhomes. That's up 19 from last week. And 122 are condos. That's up 10. For coming soon listings, we have 429 of them as of this morning. That is 18 less than where we were at last week at this time. 285 of the new listings did sell in the first week so far, which represents about 27% of all listings selling in the first week. So that's still a very, very fast pace. And that doesn't include any that might have been listed over the past couple of days that have been generating interest and offers as well. For total listings, we have 3,741 as of today, which represents an increase of 174 from last week and 17% more than where we were at this time last year. So we are certainly starting to accumulate a little bit more inventory for buyers to pick from. Normal for this time of year for inventories to go up, not down. So steady pace, it's good. It's not unhealthy. It's healthy to accumulate inventory at this time of year. Sales, open houses, showing activity, all, in my opinion, very, very good, very, very strong. If you're a seller, still certainly a seller's market when it comes to that. Of that total available homes, 2,081 are single family homes. That's up 112 at a median listing price of $525,000. That is unchanged for the second week in a row. 732 are townhomes. That's up 24, median price of $320,000. That's up $5,000. 928 are condos. That's up 38 from last week at a median price of $215,000. That is unchanged. 838 homes went from active to pending. That's up 28 from last week. And 453 went from pending to sold, which is down substantially from last week. But the first full business week of the year is usually pretty slow. So on the mortgage side, let's talk mortgage. Rates are up about 0.3% from where we were this time last week. We are pretty much basically back to where we were 2 weeks ago with our 30-year mortgage rates, with those being in the high sixes and sometimes close to 7%. You should, as a buyer, if you're looking to lock, buyers should still be able to come in at least under 7%, if not 6.75 or 8.75 with a good mortgage broker. From 1 month ago, we're up by just about 1/8%. From 3 months ago, we're down about 3/8%. We are just over 1/4% higher than 6 months ago and 1/8 lower than 1 year ago. So still a fairly narrow range. Moving on to showing activity, realtors scheduled right about 17,000 showings in the past 7 days. That's up about 12% from the prior week and about 100 more showings than the same week last year. 80% of all showing activity is on homes under 500,000, and homes under 500,000 make up only about 67% of our market. So certainly the lower end of the price range, for obvious reasons, more affordability. The lower end of the price range is seeing more showing activity, where 80% of all showing requests in the past week were done on homes under 500,000, even though they make up only 2/3 of our market. So showing traffic is solid. It's good. Well-prepared homes. We're seeing multiple offers above list price. I did have a client this past week, beautiful house. We bid $20,000 over the list price on the home. Threw in a bunch of other strategic tools that I have to use for my buyers to try to help win offers on properties. But that particular seller ended up still accepting an offer that was significantly over where we were, $20,000 over list. So sometimes those strategies don't work. Sometimes these sellers just look at the net bottom line in hopes that they're going to hit that number. So it was unfortunate for my buyers, but that's just kind of the way things were. Again, that's pretty much 2 weekends in a row, unfortunately. So, and I don't see that slowing down anytime soon. All right. So that's kind of the week that was on the numbers side of things. If you're a homeowner, I kind of like just to talk to you a little bit about if you are considering selling a home or if you're shopping for a realtor to help you sell your home. I got a call this week from a past client of mine, of a family friend. I've helped a number of his family members buy and sell homes over the past, 15 years. He called to apologize, one, for not calling me to sell his home. He listed his home with another agent. He called me in a panic. And the reason he was panicking is because his home has been sitting on the market for 40 days and he couldn't figure out, why is my house? I have a nice house in a nice neighborhood at a nice price. Why is my house not selling? There's decent photography. Because he was listed with another agent, I had to tell him that, sorry, as long as you're under contract with another agent, there isn't a lot of information that I can share with you about why I think your house hasn't sold. I can't step on another agent's toes if you happen to be listed with another agent. But I didn't say this to him, but after looking at his listing, I still had some personal thoughts that I kind of want to share here. And he's not on this email chain, so he doesn't see this. And the fact that his house is now 40 days on the market, actually he just canceled the listing here within the past couple of days with that other agent. But some of the fatal errors that the listing agents made on this property are going to cost my friend thousands and thousands and thousands of dollars, unfortunately. From my opinion, they had 3 fatal errors when they were trying to sell his house. First, the listing agent put in public remarks that the seller's preferred lender could offer a discount on the loan if the buyer chose to use the preferred lender. And we'll get into why I think this after this. 2, the listing agent used ChatGPT to create the public remarks for this listing. 3, the property is in an association, which for where this house happens to be located is very rare, so it's uncommon for that area. So now let's go through each of those 3 points kind of a little bit more in depth. Starting with the first error, the vast majority of prospective buyers are already working with an agent. They're already working with a lender, that whether that lender has been referred to that buyer by the buyer's agent or whether they found this mortgage broker through friends or anything like that. By putting the terminology in the public remarks about the seller's lender as the preferred lender on this, the listing agent inadvertently created a barrier and distrust now between the seller and the buyer. And the reason I say that is because relationships have been built before a buyer ever saw this property on the MLS, before they ever visited it. And now this listing agent is trying to essentially get in the way of that trusting relationship that's already in place, which creates a seed of doubt in the buyer's mind, in the buyer's agent's mind. Now all of a sudden this buyer's like stepping back going, whoa, I already have all this. I don't need to be told this information. I don't need to be given this information. And I don't need somebody else, especially as a buyer's agent, try to get in the way of my relationship with a client. So that's error number 1. To me, that was just a bad way to do business, trying to interfere with another agent's relationships or another buyer's relationships that they have. So second point, ChatGPT sounds like a really cool idea to create remarks, and you may have used some of this stuff to write letters or created descriptions for things that you've had. But the problem with ChatGPT, it sounds like a really good idea to help generate buzz, but really it creates a salesy, long, over-the-top description of a property. It's just too much. And the description, it's overly wordy. It doesn't use phrases and descriptions that normal people use on a daily basis. It doesn't sound right. It created terminology that would not add to the saleability of this particular home because it was just so incredibly over the top. The area my friend lives in, it has more ice houses and pickups than it has indoor sport courts and Land Rovers. I mean, so some of this Chat GPT stuff, it's targeted to those buyers who are kind of more of that higher end buyer pool, where this house is at a good price and in a good area. You wanted to describe why somebody would want to live in this neighborhood or this area. And honestly, the Chat GPT stuff was just not descriptive of what that area and what that home and what that neighborhood can offer. So there's just a lot of things that you have to know who your customer is, and ChatGPT does not know who your customers are. You as the listing agent have to know who that prospective buyer of your listing is, and you have to create that description. You have to come up with the story for who that buyer is for that property. Don't rely on ChatGPT. To me, ChatGPT is a lazy way of doing business, and ultimately that was fatal error number 2. On the third point, the association. So in the MLS, it showed an association fee on the property, but in nowhere in the description, nowhere in the public remarks did it say, okay, what is this association about? What does the association fee cover? For the particular area that my friend lives in, associations are rare. It's an area where people move to get away from associations. They don't want their neighbors looking over their shoulders with crazy rules and regulations or over the top rules and regulations. So when buyers would see a high association fee or a relatively high association fee for this house, not knowing what that fee actually covered, all that fee actually covered was a shared community well and septic system, almost like a city water, city sewer situation in a rural residential neighborhood. So the association fee really only covered the water and the sewer. It didn't restrict as much on the usage of the property, which would have been very helpful to know for any prospective buyer to get out there to understand, I'm not paying an association fee. I don't want to be in an association. This is crazy. Well, the association's not as significant and severe as you might think. And that was fatal error number 3, in my opinion. I'm hoping for the best for my friend, that he does find a buyer for his property. I'd love to be the person who eventually helps him sell his home. But there are certainly things that we as listing agents, we're getting too lazy, especially new listing agents. We're getting a little bit lazy, and we don't understand who our buyers are. And that can be very frustrating if you are a seller when your agent doesn't know who they're targeting and who their client is. So now he's canceled his listing off the MLS. Now that raises red flags to buyers as well. So if you look at Zillow or Realtor.com, you can see that listing was canceled. And you as a buyer, like, why did this get canceled? What happened? Now I have concerns about it now that it's canceled. There's red flags now because of that. And that's ultimately going to be another reason why he's potentially not going to get a great value or great price in his house, even though I think the house is actually priced where it should be. That's where I would have priced the home. Photography is okay. It isn't about just pricing a home and photography in many cases. It's the storytelling and how you attract buyers to your property. So anyway, that's what I have for the week. Probably a little bit wordy and a little bit long for you this week. I apologize, but I am here to answer any of your real estate questions at any time, day or night. Please reach out anytime. I am an open book for resources. I get a lot of commentary from people to say, hey, thank you for providing all of this information for free. This is very helpful to kind of understand what's going on in the market. I love doing this. I love producing this weekly video. I hope you get value out of it. I really appreciate your time. And again, reach out anytime. I would love to help you with your real estate goals, have a conversation, answer your questions, be a resource, whatever you need. So that's what I got. I hope you have a great week. Talk to you soon.